So today we're going to talk about a company that sits in a subtype that has worked for me extremely well in the past and might do so again. Hi, this is Fabi with Equity.Guru, and today I'm going to talk to you about CopperBank. While the name says a little bit of what they do, it says everything that they do. They basically collect projects that are out of the money, options, so to speak, making a bet that the price of the commodity, in this case copper, is going to go up again. That is super interesting to me. I have invested in such companies like this before with a lot of success. I'm talking, well, I'm not even gonna tell you how much I've made. I'll tell you that some other day, okay? Let's just say that my most successful subtype of company are optionality plays, and this is one of them, so let's check it out. So when you first land on CopperBank's website, you will see that management team and also technical advisory might have some people that you are somewhat familiar with. Johnny is the CEO. I'm not gonna even pretend to know how to pronounce his second name. Maybe it's Kovacevic or something like that. He is a huge poster boy for copper. Basically, he goes around in different trade shows, conferences, and his idea is to talk about copper itself. That gets people to see what he does for a living, obviously, and gets them to invest in CopperBank as a natural result of things. He once got into a Tesla and just drove around the whole of the United States, at the very least. I don't know if he went, from Canada into the US. But whenever somebody wants to talk about copper in conferences, a lot of the times he is the go-to guy. He has done a lot of research. He's very well known in the copper side of the business. If you Google his name, you're gonna see him talk about copper 24/7, basically. Another name that I recognize straight off here was good old Thomas Ulrich. And he is a geology advisor for CopperBank, but he is the CEO of Aston Bay Holdings, which is a company I'm very familiar with. Also, William Willoughby is a guy that I have for sure seen have a link with different companies, having spent some time with Denison Mines, Teck, and Cominco. And if you don't know Teck, it is the largest multi-metals company in Canada. So very strong advisors here. So basically, CopperBank has a strategy that is to gather projects that are out of the money options in copper. Anything that will not make money at current copper prices is interesting to them. Why? Because you can pick up properties at rock bottom. They go for very, very cheap, historically speaking. All the tens of millions of dollars that have been spent in these projects don't have to be spent by CopperBank. This is something that we have to learn, not just in our heads, but instinctively in mining. It's that you buy the cheap stuff at the bottom and you wait for a rebound. And that waiting can be very brutal. Not everybody can wait that long, and that's why some people sort of fall to the wayside. Now, if you take a look at CopperBank Resources Corp share price, you'll see that they're close to a 52-week low. So you have to put that into context, that they're sitting at about $11.5 million in market cap. Share count quite high for a company this small. I particularly don't mind there being a lot of shares out. What matters is the market cap. How much is the company worth against the assets that the company has? So even if you go back here 3 years, if you were interested in CopperBank before, you should definitely be much, much more interested in it now. They have purchased a property not that long ago. Just about a year ago, they bought Red Hog Resources because they held the Copper Creek project, which we're going to go into a little bit right now. So Copper Creek is in Arizona. They own 100% of it, and it had a PEA completed in 2013. So as far as I know, pretty much everything that they have their eyes on is something with proven resources to a certain extent. They're not into the bare bones exploration game that's extremely risky. Now, $80 million has been spent historically in this area, so they got this project for pennies on the dollar, and they did a share buyout, so it cost them very little. Now, this is an interesting property to me, the Copper Creek property, because they are looking at copper grades that increase with depth. So this would be something that would be interesting to expand before possibly selling it on. Now, if you take a look at the cross section, and I'm no geologist, so bear with me, but we have a huge area of over 1% copper, which is decent, but you have to take the depth into consideration. Now, I believe the 840 here is feet. You have here 1 kilometer of, ruler to base yourself here, and both 840 feet of 1.4%, as well as almost 2,000 feet of 0.48% are both extremely good. Now, if we look at this cross section here, you can see that at the very bottom of it is a higher grade zone. The question is, does that higher grade zone extend and get richer as you go deeper? So that's something to think about. And here comes the strategy with everything that CopperBank is doing. The historical estimate for this property was based on metal prices of $3 per pound. And what is the spot price of copper today? So live metal price is $2.82 per pound. Let's take a look at the historical. Okay, so I like to take a look at the 5-year chart. So 280 something, not crazy. Obviously, when it was just below $2, it was way too low. It didn't stay there for that long. Pop back up. Obviously, this has everything to do with the world economy. If people are buying more electric cars, if they're upgrading, if they're buying computers, phones, etc. So this is very much linked to China and the general electrification of everything. So here are some of the interesting economic numbers for Copper Creek. Pre-tax NPV is at 488. Now this was done in 2013. I'd be willing to bet that some of these costs have gone up. So maybe this is off a little bit. The pre-tax IRR of 16% is not very high, hence the reason why they can buy this project so cheaply. And the pre-production capex is sitting at $857 million. Now, ideally, I would like the capex to be a little bit below the NPV, but I do recognize that although this is pre-tax, it's a 7.5%. It may get better, it may get worse. But at the end of the day, this would need much, much higher copper prices for it to make a lot of sense. And that's pretty much the same with the other resources that they have. So this is an interesting sensitivity chart, and I love looking at this. Whenever a company comes out with a PEA or a feasibility study, this is pretty much the only thing I look at to filter out if I'm interested in the project or not. So if we have an NPV of 5%, which is what is most commonly used for more advanced projects, so we might get there if they advance this project. Copper would need to be at about 340 for the NPV to be a little bit higher than the capex, which is what I said. So it's not out of this world. I do believe that copper prices are going much, much higher, and this is the opportunity because they have projects in safe jurisdictions with proven resources. They can draw them out to improve the economics, but it's more of a sit and wait game. And that's why the share price isn't doing so hot right now. Copper is mostly hated, and if you like to buy things that are cheap, this is an option for sure. Now, I've watched CopperBank in the past before while it was hovering around the 8-cent range. I think it was a couple of years ago, right about here. And I did notice that the CEO and the chairman only take shares as payment. I'm not even sure that the chairman is taking any pay whatsoever right now. Gianni takes his pay in shares and not in cash, which means that they don't have to go to the market all the time for money. That's great because that basically means that they can live longer. And as long as they can keep raising and holding onto these properties, well, then you could assume that if they survive the bear market, their projects could be worth much, much, much more in the future. Can you imagine if copper ever hits $4 per pound? Then speculators in the future will be coming back to this and they'll be looking at all these numbers and they'll see, well, what is the sensitivity case for $4 per pound? And then they're going to see that it's sitting at $1 billion. Well, let me tell you, this is not going to be an 11.5 million market cap if they have a project that is worth that much. It's impossible. But then again, most people don't like to wait for prices to rebound, and this can take many, many years. Could take too many years that the company basically taps out and gets bought by somebody else. That's what happened to the company that they have recently purchased. I'm not going to go into their other projects because what matters here is really the strategy. So let's get down to the economics. So in 2013, there was a pre-feasibility study done on the Contact project, and they used an NPV 8, which is something I like. 8% discount is quite safe. Well, safe enough, let's just put it like that. And this project is believed to be worth $106 million with a much higher IRR of 25.9%. This looks good. Let's go to the sensitivity study again. At 350, this NPV sits at 167. So this number here is based on 320 copper price per pound. It is not sitting there now. It's not even sitting at 290. So at 290, it's only worth $45 million. But then again, you have to take a look at the initial capex, which is too high. It's sitting at 188. So really, this is another case of if copper prices run up to $4, then how much is this all gonna be worth? And I can tell you a lot more. There's also the belief in the Contact project that they could possibly lower some of the expenses, maybe do, a phase 1 project and then a phase 2 in order to gain some of that cash back before reinvesting it. The contingency for 20% seems okay, but I have seen projects with lower, so this can also be saved possibly. There's also the opportunity of getting royalties. Now, there's also the Pyramid and San Diego Bay in Alaska, and this is where a lot of exploration work could be done. The Pyramid deposit has 153 million tons at 0.37% copper, but there is also the San Diego Bay deposit. Now, this is something that can also be further explored for a lot more pounds in the ground. So this is it. You have to be into the strategy in order to understand CopperBank. This is a long-term buy and hold. This has worked very well for me in the past to buy and hold companies that have out of the money options into something that you believe is going much, much higher. I believe in copper. I am looking at copper companies. I'm looking to increase my holdings of copper companies when the time is right. And I am definitely adding CopperBank back to my list. I think at these levels, it's got a lot of potential. That is, like I said, if the copper price can bounce back up and we're still holding. And that's CopperBank. That's CBK on the CSC, on the Canadian Securities Exchange. It's at 9CP in Frankfurt and CPPKF in the OTC market in the US.